Good morning, everybody. It is Friday, May 24th, 8:46 a.m. We are live once again on another market open. Folks, it is officially Friday. We are done with the week. We have one more week left of May, and then we're done for the month of May, and we head into June. It is just absolutely insane how fast the world is going, or how fast at least this year is going. But we're here on Friday. And we got a lot to talk about. Nvda earnings was this week. This was the biggest earnings of the week. It kind of captured the attention of this week. Nvda right now, I'm looking at in the pre-market, continues to maintain its momentum. And the reason it continues to maintain its momentum, we talked about this a lot on the market close yesterday for a good 20, 30 minutes, is that money is flowing into Nvda over other companies. And what we saw yesterday was a radical shift between the entire market taking a crap and Nvda continuing to go higher. And it was really interesting just to see this one stock kind of suck in all the money from the rest of the market. There was some macro geopolitical data yesterday that wasn't the best. Was it enough to tank the S&P 2%? Or no, I don't think so, right? But I think people just wanted an excuse, whether it was China and Taiwan or the PMI data, to invest in Nvidia, and they had their excuse yesterday. So we're going to talk about Nvidia. Spot Ethereum ETFs have been approved. They need a couple more weeks before they officially go live, but we're going to talk about the implications of that. Ethereum didn't really move yesterday. It's up 30% already for the week, so the pump kind of happened on Monday. If you saw on a Monday, Ethereum was $3,000. It went up to about $3,700 literally on Monday, so people already knew this was going to happen. It was front run, and the money ended up coming into the equity, or into the asset. So we'll talk about that. Palantir has a new partnership, not a huge partnership, but it is a new deal that I want to discuss today. So we're going to start with that as our first subject. And Cathie Wood bought PayPal. I want to talk about that and the implications of what it means for Cathie Wood. Maybe saving our good old PayPal stock. Maybe she puts some money in there and gets people to be excited about it. And then we got a lot of macro updates. We got money market fund updates. We have oil updates. Oil starting to come down a little bit more. And some more updates on where we think inflation is going over the next few months. Thank you, everybody, for being here. It's time to get into the market open. Jay Roberts, Brent, Top Dasher, Eric Wood, Felicia. Felicia says we have a long weekend. That is correct. We do not have the market open on Monday, 27th. It's Memorial Day, so we are not going to be here on Monday. That is correct. I'm Beneficial, Miami Ren, Carbine Collector, Emmanuel Jubei, Nolan, D Visual Arts. What's up? Persian Prince, Honey Bee, Juan Carlos, Zocold. What's up? We got Amir in the house. Amir is the biggest Twitter troll that thinks he's not a Twitter troll, but he is a Twitter troll. So Amir, shout out to you. I'm happy you're. I posted this video of this guy who gave the bear case for Tesla, and Amir was like, I stopped listening after he mentioned PE. And I was like, dude, it's like 10 minutes. You do you really, you can't spend 10 minutes listening to a guy who has a different perspective? And then he takes a picture of his daughter. He was like, no, I was spending time playing with my daughter for those 10 minutes. That's more important. And like, how am I supposed to win against that tweet? Like, and now everyone likes your tweet about you and your little girl playing, and everyone's like, yeah, man, life's so important. Why would you listen to this Tesla bear? You should go spend time with your daughter. I can't win against that. I can't win. So it's like, all right, you won that battle, dude. You won that battle. You got it. Michael Wilder, what's up? Alex, what's up? Hiren Patel, Charles, Red Panda, Jan, Ed is on, player one, Charles, Josh. All right. So let's get started. I think we're going to start off with a Palantir deal. Let's get into that one first, and then we'll keep going from there. This deal was really interesting. Also, Dan Ives, by the way, he raised his Apple price target to 275. So he's getting really bullish on Palantir. So this is the Palantir deal. Let me share the screen right here and let's discuss. Rob, Walt, J Duff, thank you all for being here this morning. Mehul, thank you as well. Alex says, are you going to do a market open on Monday? It's going to be hard to do a market open with no market open. So probably not. We've done it in the past, but I guess we'll see, but most likely not. We probably won't do it. I'll probably have an interview just lined up on Monday in the afternoon, and we'll just go live for that. Okay, so Proxit announces strategic partnership with Palantir Technologies. Proxit, a global full-service digital engineering firm serving brand-name clients on the cutting edge of innovation in healthcare, life sciences, fintech, e-commerce, and real estate today, announced a strategic partnership with Palantir. Palantir offers an integrated suite of data analytics. We're so proud of our relationship with Palantir, said Vlad. Oh, wow, his name is Vlad. CEO, we work with clients of all sizes across many industries, and the power of Palantir software is being able to give all businesses, SMBs through enterprise, the same power and control over their data as the largest competitors. And then Ted Marbury, global head of commercial, says we're excited to work with them. So Proxit is a custom web, mobile, and software development company offering customized and tailored technology solutions to a wide range of clients. It seems like it's an IT consulting firm, if I'm reading this correctly. Yeah. So this is their website. Proxit is a software development company, data solutions, ML, AI solutions. Oh wow. You know what, this is so interesting? This is one of those deals. This is one of those deals where individual companies are now going to start be building their entire business around something like a Palantir. So there are, I would say, hundreds of firms across the world, IT firms that are like AWS experts or Oracle experts, right? Or Azure experts. And literally they build very big businesses off Azure or AWS, because those, companies are doing $100 billion a year in run rate, at least AWS. And you can build a couple $1 million a year business just on helping your clients integrate their data within an AWS, an Azure, an Oracle suite, et cetera. So they're saying right here, they are Palantir experts. We enable users to leverage the Power Foundry with an operations and business process focus so teams can analyze, decide, and produce results. Our team of certified experts will help you navigate the complexities of Foundry and optimize its capabilities. We want like 1,000 Proxits to exist because they're the ones that are also pushing the software and reinforcing it within different industries and different companies. I mean, look at that. On the top 5 things they offer, one of them is Palantir expertise. That's incredible. So interesting deal. I haven't seen a company like Proxit in a while, or actually in the past couple of years. I mean, I think I've seen one other company that's like a kind of Palantir consulting firm to an extent, but really nice to see that they have made an official collaboration and now they are working together on implementing Palantir software throughout any of these different companies. Exciting stuff to see for Palantir. Is that moving the stock? Probably not. I mean, the stock market probably doesn't care about that. But if you're a long-term investor, you want to see more deals like that happening for Palantir. Palantir right now in the pre-markets is $20.79. So that's what we got on Palantir. You guys are saying to still do something on Monday. Mo Love says, if you ever get the chance, ask Palantir how they use their own software to help their business. We actually did ask Chad, who's a Palantir employee, when he was on my market close a couple of days ago, to create a video showing that. So Chad is the guy that creates all the Palantir developer videos. I've gotten to know Chad, and he said he's actually going to come out with a video that shows how Palantir uses AIP inside of Palantir. So we will get a video of that probably in the next month, but that's something that he wants to do. Live stream your bike ride. Dude, you know what's so funny, dude? You know what's so crazy, actually? I had a dream last night, and I didn't take any melatonin, so I don't know how I had this dream. But it's so ironic because we're probably not going to do the market open on Monday morning. But I had a dream where I was doing the market open. I shit you not, dude. I'm not making this up. I had a dream where I was doing the market open, and I was on a ship. And it's like it was such a vivid dream, dude. And like we were on the ship. And I remember there were 1,390 people. See, I can't make these details up. I literally remember exactly how many people there were there. And like the ship was moving too much. So like, like everything was like swaying back and forth, and I'm still trying to do this market open. And then for some reason, I remember this waiter came up to me and he offered me a pancake made out of brownies. This is what I mean. You can't make this up. This is like really like stupid details that you have to have in a dream. That's just like random, right? And now I want like brownies for some reason, dude. Like that dream is like, I'm salivating for brownie pancakes. I don't even know if that's a thing, brownie pancake. But he came up, we're trying to do this market open. I'm trying to eat the brownie pancakes during the dream. The camera's dying. The fucking Wi-Fi is horrible. We're on a ship, so there's constantly moving back and forth. And yeah, that was the dream I had last night. I don't think there was any purpose or meaning to it, but like we were definitely on a ship and I was trying to do the market open. Maybe it was warning me that on Monday, you're not going to be able to do the market open. I just realized this morning, we have Memorial Day. And maybe that was like a precursor to like, you're not going to be able to do the show one of these days. Cause it was like hard to do the show. So maybe it was kind of like saying, hey, you won't be able to do the show next week, but it was weird. It was really weird. The boat was on its way to the moon. Yeah, exactly. Dude, it was so weird, but like I explicitly remember I was setting up the camera and I was on this boat. I think it was like a family cruise, to be honest. That's what you know what it is? You know what it is? I think I just solved it. My mom yesterday was talking about going to Niagara Falls during the summer, just for like a 2-day vacation. And probably I was thinking in the back of my head, I don't want to upset my mom. I don't really want to go. I'm probably going to go. I really don't want to go. But I was just like, damn, how am I going to do the market open if we're in Niagara Falls? So I'm probably thinking, okay, the water from Niagara Falls, and then we're not going to be on a cruise to Niagara Falls, but I'm probably put together, okay, so we're on vacation, so it's already hard to do the show. and then Niagara Falls, so the water, and then so somehow a cruise comes up out of that. We're in the water, right? And then I'm trying to do the show. I just solved it. That was the subconscious thought I had to get there. So Nvidia is going to be shaky to 1390. Yeah, maybe the ship was the market. Who has been to Niagara Falls? I haven't been to Niagara Falls since I went there like in 2010, and we went there for like a day from the Buffalo side, from the New York side, not from the Canada side. It'd be nice to see it again. Do I care that much? Not really, dude. Not really. But I mean, it'd be nice to see it again. It wouldn't be the worst thing. This is Niagara Falls. For those that don't know what I'm talking about, it's like a beautiful waterfall. It's really cool. And there are ships that go through it. There are ships that maybe that's also what came to the dream. But I think we went in one of the ships that actually, I think we were in the ship. I forgot the name of that company, but we were in this ship right here. This was a long time ago though. Anyway, I guess we'll see if I end up doing a market open from Niagara Falls, because that would be pretty fun. Let's talk about Ethereum. So Ethereum seems to be approved. The SEC former commissioner that was on CNBC a couple weeks ago, who was mad at Roaring Kitty for like being Roaring Kitty, he's on CNBC again, and he's giving his thoughts on why the ETFs were approved. It's really weird, dude. Gary Gensler he was not going to approve it 48 hours ago. And then out of nowhere, he's like, actually, no, it's approved. One could only argue, did someone give him a call and tell him to get it approved, or what's going on here? So let's hear from this, and then we'll keep going from there.
Our heads a little bit about what we're seeing in terms of what's really being approved and what's not really being approved, and how this could even work.
Yeah. So there's two pieces.
Lay it out.
There's two pieces of approval for one of these types of products. There's the listing approval, which is what happened yesterday. And then there's the approval of the product itself, which is still pending. What's that is called the registration statement. That we need to find out. Let me say this. This product is eligible for listing, but it will not actually be trading until that registration statement is approved. So it's okay in theory? So it's a step. It's a step in the direction.
But does it mean it's inevitable?
I think it means it's inevitable. We went through this same process with the Bitcoin product,
right,
where almost all of the questions were decided. The question that was decided yesterday, to speak technically, is that the market is efficacious enough for this product to be listed on the exchange.
Okay, but let me ask you a question.
I like that word, bro. Efficacious. I'm about to look that up right now. I think it just means effective, right? Efficacious. It means effective. Yep. There you go. Efficacious. I like that. That's a good one.
That was what was decided. But there are other questions out there.
Oh, let's talk about those questions. But as you know, Gary Gensler and the SEC went kicking and screaming to allow the Bitcoin ETF, and only did so because a judge effectively said you have to. This is different. So what is different this time?
What is different this time is there was a settled issue of whether the underlier, Bitcoin, here the underlier is Ethereum, was a security or not, or transactions in Bitcoin were securities transactions. The SEC has not definitively said, up till now, and they still haven't definitively said, that underlying transactions in Ethereum are not securities transactions.
Is part of this because of what Congress just did this week to pass this first crypto bill and basically say it's going to be the CFTC that is overseeing all of this? Is this them putting another chip on the table saying, wait a second, we want to claim our legal framework for this?
My view, and my view for a long time in this program, is that progress, development, whatever you want to call it in this space, was always going to be incremental. What did they do this week in Congress or over the last couple of weeks? They made more clarity around custody and the cost of providing custody services for digital assets, because they weren't happy with the way the SEC had done it. Now with this bill, they're saying, look, we want a path for products like Ethereum, other digital assets, to be able to trade like securities. And whether they're classified as commodities or whether they're classified as securities, we, Congress, want to see that path. And that's what you're seeing playing out.
So it looks like Congress is finally getting their shit together. And the bill that just passed the Senate, which was the FIT bill, this stands for, I forgot what it stands for, but this is what it stands. It stands for Financial Innovation and Technology for the 21st Century Act. This thing passed the House, likely going to pass the Senate. And if it does pass the House and the Senate, then that means crypto is going to continue to gain some momentum, or at least the regulatory framework for crypto is going to gain some momentum. Now, Bitcoin has been annoying over the past couple of days. It fell from 71,970, literally $30 away from 72,000, back to 67,540. And if we look at the ETF inflows on Bitcoin, they've been good for the past couple of days. For for Wednesday, we had 154 million, and yesterday we had 107 million still net inflows. Now, we had a little bit of selling and outflows from some of the other funds. That's why it's been bad for like not as much inflows as we wanted. But the point is, money's been coming in. Ethereum is going to allow a lot more new money to come in. And if Ethereum allows more money to come in and more people are going to get access to products like an Ethereum ETF or a Bitcoin ETF. And again, the reason institutions like this stuff is because they don't want to buy Ethereum on their own, right? They want to just be able to allocate to some ETF and easily get the job done. Then that's going to be beneficial for the entire ecosystem. Now, the question is, what does that mean for Ethereum's price? And Ethereum's all-time high is 4,800. Right now, it's at 3,800, pumped up from 3,000 last week. It doesn't look like it's necessarily going to fall down, given this money's expecting a lot more inflows to come in. Market cap right now, $445 billion. Could we see Ethereum get close to, a $750 billion market cap this cycle? I don't think that's crazy. And I definitely don't think it's crazy to get to $1 trillion if Bitcoin gets closer to 2 or 2.5 trillion in market cap. I guess it really depends on when is the Fed cutting rates, because when the Fed cuts rates, that's also going to be one of the core theses for liquidity entering into the marketplace, which would be et cetera. If we see a Doge ETF, I'm calling the market top. Yeah, I agree. If we see a dog with hat ETF, there's going to be an issue. Now, granted, if we see a Solana ETF, I think that's very possible. Maybe not soon, but I think if the ETH ETF happens, the Solana ETF will also be able to happen. It is good for Robinhood and it is good for Coinbase. So Coinbase is going to get a lot more institutional trading volumes, given ETH is going to allow people or allow them to be the custodian of that ETF. And then Robinhood is just going to get a bunch of people not only buying Ethereum, but they're going to be buying the ETH ETF on their platform. And so Robinhood at 1940, I think, market makers are kind of holding down Robinhood right below 20 for a couple of reasons. We saw the macro instability yesterday. We saw them reduce their margin rates. And overall, it had a nice run. So it's taking a little bit of a pullback. I'm happy to see we're holding 19. I want to keep holding 19, eventually make our way up to 20. In June, we have one big catalyst, which is the May results are going to be out. And those results, I think, are going to be pretty good. And so we'll see what happens from there. But the market, Bank of America's research they pretty much solidified everything we've been talking about when it comes to Robinhood. Now it's just the question of the next two earnings playing out and being strong. And then you had Nvda. Remember, Nvda is one of the top holdings on Robinhood for users. So Nvda going up by 9%, that's going to help their assets under custody as the entire market goes up as well. Let's talk a bit of macro. So let's discuss a bunch of different things that are going on in macro. First of all, money market funds. Put in the chat, do you guys think it went up or down? Do you guys think it went up or down for money market funds yesterday? I actually was surprised when I saw the results on money market funds. I did not think it would go the way it went, but it did go the way that it went. Why did that sound like a bar, dude? It sounded kind of cool. What do you think? Up, down? Michael Wilder says down. June says up. William says down. Okay, it looks like it's 50-50. Money market funds have gone up by $17 billion to $6.07 trillion on the sidelines. This was actually interesting, dude. Last 2 weeks have been phenomenal weeks in the market. I mean, the S&P hit 533. You would think money market funds would take some of that money out and throw it into the markets, but it just continues to show you there's a lot of money that has not entered into the ecosystem. And maybe they're scared. Maybe they're just collecting their 5% and you're like, know what? You can take the risk of betting on Nvidia, but we're going to, stay set here, get 5% and not complain. That could be an argument. But once the Fed cuts rates, I don't know if you can afford to just be sitting in money market funds. So it's nice to see that money is there in the money market funds. It's just going to take some time for it to go higher. Jose said up. Yup, it went up $17 billion to 6.07 trillion. Now, as a result of, one thing that's contrary to the money market funds going up is oil goes down below 77 a barrel for WTI crude. We were holding 77 for the past 24 days. So it's been a minute until we got to this level, but it's really nice to see that oil starting to come down. And if oil can get back into that $74, $73 level, now Biden is releasing some oil from the strategic oil reserves yesterday. So maybe that's helping push oil to come down. But in general, Middle Eastern instability has been less. I know the Iran president did pass away, but overall, it's been not as bad in the Middle East. If that thing can get to 70 or 74, 72, we're going to see a decline in inflation, especially in the energy and oil and gas sector. And that's going to be really exciting. If we look at WTI crude, the last time we got to 72 was February 2nd. Over the past year, the lowest we got to was 68 in December 2023. That's when inflation, or at least that's when the expectation for inflation to come down started becoming heavier. And the highest we got was 93 September 2023. We only got close to that in 2024 in April at 86. So right now we're headed in the right direction. Over the past 5 years, again in 2022, this is when inflation was 9.9%. We were at 118 a barrel. Do you guys remember that? That was crazy when it was at 118 a barrel. I think gas was like $4.95, $5 a gallon at the time. That was pretty insane. But what's still, it's coming down nicely. It's only up 9% year to date, which still is a lot, but it's not up as much as it needs to be. And you can see in the past month, it's down 7%, which is really good. So we've got oil coming down and we've got money market funds going up. The 10-year right now is currently at 4.49, so up just a little bit, but not at the 4.7 levels that it was at a bit before. Do you think any rate cuts? Well, it's very interesting. So Goldman Sachs just came out today, and Goldman Sachs said Jerome Powell and the Fed will first cut rates in September. They previously thought it would happen in July. They also expect the Fed to deliver 2 cuts in total through 24, with 1 per quarter for every other meeting. Now, the Goldman Sachs CEO actually said the opposite. David Solomon said we're not going to get a rate cut at all this year. Whereas the equity team at Goldman Sachs actually says, you know what, we think by September we'll get 1 cut. I think if this inflation data continues to be the way it's turning out to be, with money market funds going up, oil and shelter hopefully coming down, and then some of that money market fund money coming into the markets, we are definitely going to see the Fed decide it's time to at least think about cutting. And if that's the case, we hopefully should get a cut by September. I think July is still a little too early, but I think September could happen. Here's JP Morgan on what they think is going on with the markets. This is from just this morning, and how they think rate cuts are going to impact the broader markets. Yes, we'll talk about Cathie Wood buying PayPal in just a sec.
It's on the Fed's inflation fight and the impact on rates. I want to bring in Priya Misraj, who's the fixed income portfolio manager at JP Morgan Asset Management. Good morning to you.
Morning.
It is the front page of the FT this morning. Yellen says many Americans still struggling with inflation. Fed officials were open to further U.S. rate rises to quell inflation. Is there any way this is actually going to get better?
So I think it is getting better. It's getting better slowly. So when I look at the inflation numbers, clearly it declined very fast at the end of last year. That progress stalled in the first quarter. But we feel very strongly you shouldn't extrapolate from that, because if you see the last inflation report, that did slow down. We're back to monthly numbers around 0.3, so better than the 0.4 that we were seeing in the first quarter. The other thing I would highlight is if you look at how concentrated that inflation number is, of the 3.6% that we're seeing in core CPI, 3.3% of that is really coming from shelter and auto insurance. Now, we have to live somewhere and we have to drive a car. So I get that these are very important components, but they are lagging components. The fact that home prices have stalled when we look at the high frequency measures of rents, they're actually slowing down. That's going to feed through into shelter inflation. Right. It's happening slowly. I think the Fed is trying to be patient. They have to say that if inflation starts to reaccelerate, they'll absolutely hike. I think the market got a little too nervous around the minutes. Since the minutes, after that meeting, we've actually had a payroll report that's suggesting some growth moderation. We've had an inflation number that's showing it. I think the market is getting nervous around Fed rate cuts. It's going to happen. We think by the end of the year, they'll be on to cutting rates, because they're going to look at that cumulative progress.
Two things going on. You have your boss, Jamie Dimon, on one side, who I don't think thinks it's coming down so quick. You can tell me otherwise, but we've seen some of the commentary that he's made even on our air just in this last week again. And then you have firms like Morgan Stanley, which thinks like the whole thing is going to roll over by the end of the year in like the fastest, quickest, crazy way you've ever seen. So who's right?
So I think the market's very much in the soft landing.
Your boss or not?
Right. Well,
your boss or Morgan Stanley, exactly.
Yeah, on live television, I'm going to say my boss is an idiot. Yeah, that's definitely what I'm going to do.
When Jamie thinks about all the outlook, the entire distribution of outcomes. He has to look at the outcome where if inflation doesn't slow down, what's going to happen? At that point, the Fed doesn't cut rates. I think the entire soft landing is predicated on the Fed starting to ease off. It all comes down to, is monetary policy restrictive? And I think this is where we looked at the Fed minutes. The Fed's debating it. The market's debating
the Fed
it.
thinks it's much more likely that it is not restrictive yet. They're kind of rethinking what they've been saying.
So they're debating it. I think that the tricky part is it is very restrictive for some parts of the economy. It is not restrictive for some other parts.
And I think this is part of the problem. There was a really good piece by Ben Emmons last night, kind of laying this out, saying what we saw yesterday was a microcosm of what the Fed is dealing with, where you had Nvda shares that were so strong, talking about how they're not going to be able to meet demand, how there's so much money that's being flooded into this, technology money being spent in AI. And the Fed minutes kind of reflected that to some extent, too. They started pointing through and saying, look, there are areas where there's a whole lot of demand and a whole lot of money that's being spent. So they can't cut rates right now because you're going to see inflation that's continued to push higher, not just by spending by big tech companies, but also government spending, too. But then you have the areas where if they don't get lower rates, they're in big trouble, whether that be commercial real estate and beyond, maybe some of the other banks, the regional banks that have gotten into that trouble. And so the Fed is dealing with this tale of two cities. Which side do you pay more attention to?
Right. I would say when they are look at the starting point. If we're at 5.5 on the funds rate or the 10-year at 4.5, you can argue that you can start to take the foot off the pedal a little bit. We may end up at a much higher rate. I don't know if you're getting back to what the Fed says, 2.5. Maybe that neutral rate is 3.5. The market's pricing in 4%. I think that's the point. They can start to ease off because there are cracks. They don't want those cracks to become recession.
How much?
Look, I think she's right. I think at the end of the day, she's kind of 100% right on this. And, she basically said Jamie Dimon is trying to look at all different angles. And Jamie Dimon, he wants to be bearish so that for him, it's better to be more conservative and wrong versus super optimistic and then wrong, right? Because then your clients think you just didn't know what you were doing versus if you said, take some profits here and there, be a little bit more conservative, save your money versus losing your money in a bull market that doesn't happen. So I think from his perspective, he's just trying to cover his bases. But I think they're right about this. I think they're right. I think Tom Lee's right about this. If the numbers on inflation go down, there is no justifiable argument why the Fed can keep rates this high because they're going to be squeezing out of the economy a lot of the momentum and economic mobility just for saying that they're tough on inflation, when in reality, they know the data supports they don't have to be tough on inflation, just like they didn't raise rates back in 2021, even though they knew that they needed to raise rates. So I think as long as they don't make the same mistake, which is going to be hard for Jay Powell to figure out when exactly is the right time to do it. I mean, literally, the Fed is all about timing. You know how hard it is to time the market. The Fed is literally the biggest timer of the markets in regards to monetary policy. And they have to do it in a way that hopefully does not crash the economy. We got Deckers up 13%, folks. They're at not only is Nvda $1,030 a share, so is Deckers. So Deckers at earnings yesterday had some good sales, about 24% year over year, I believe, in terms of top line revenue. People are buying their shoes. Apparently they make Uggs and Hakas. I don't even know Hakas was a brand, but Uggs is a brand they make. And people are buying. So another thing that points against the narrative of retail maybe not being that strong. People are buying. People are buying shoes. And again, I think it's really hard to put this stuff together because the Target data shows us retail consumers are a little weaker. Walmart data shows us consumers are fine. Now, Walmart tends to be cheaper than Target, so maybe that's telling something. But then you got something like Deckers where people are buying shoes. Let me actually see the average price of a Deckers sneaker, because the reason Lululemon is in the toilet right now, Lululemon, it's down 40% year to date. It's up a little bit right now, but it's had a tough year, is because I think people realize they just can't pay. Yeah, it was at $500. Now it's at $299. People can't pay the amounts that Lululemon is asking. But if Deckers is actually cheaper, then maybe that's why they're actually getting their shoes. Deckers shoes. Let's see. What's the average price for a Deckers shoe? Okay, so a woman's shoe. I don't know if this is cheap, dude. Do you guys think this is cheap? I don't know if this is cheap. This is $275, bro. $150 for this shit. $160. I don't know if this is cheap, dude. All right, $69. Maybe that's a little cheaper. So it doesn't seem like Deckers is necessarily the cheapest shoe, right? It seems like or cheapest brand of shoes, which again is actually good because that means consumers have money and they're buying, right? And so if that's good, then that's important. Amid, come out of your office. You've never heard of Haka? No, I've never heard of Haka. What is this? I'm gonna Google it. Haka shoes. Maybe if I see it, I'll. Oh, I think I've seen these, but I've never worn one of these. So these are on average $120, $150. Haka. Yeah, I've never worn this before. Okay, so $150 shoes. People are buying $150 shoes. I mean, I don't know. I think that means people have money, right? Are you buying $150 on a sneaker? Or is that the average price for a sneaker? I haven't bought sneakers in a long time, dude. I'm like, dude, this is what I'm just like, I don't really wear sneakers. This is what I'm wearing these right now. I just do. I need to buy sneakers though, because I haven't bought sneakers. I have running shoes, but not like sneakers, you know? So I really don't know about the sneaker market. Dude, I'm probably gonna be wearing slippers for the rest of my life, dude. Like I just like unless I get a job at some corporate entity and I can't wear slippers. Even then, I would try to wear slippers and hopefully they don't find out. I just always wear slippers. That's it. Slide gang, let's go. Yep, and I have socks with my slippers. I know people think that's controversial for some reason, but I like doing it. Admit they are extremely comfortable. You should try them. Yeah, you guys gotta remember, I'm in the house most of the day. I mean, I go outside, I walk, I do that stuff, but I don't really need like the best sneakers, I guess. Like I don't care. Dude, I wear Crocs when I go outside too. So it's like Crocs are very comfortable, by the way. I mean, they're very comfortable. Where's their stock at? Because I've been starting to think of their stock a little bit more as I've been wearing them more often. Crocs are year to date. Crocs were at $85. Wow, they're at 142. They're up 80% this year. Wow. Interesting. 8 billion market cap on Crocs. That's one we got to do some DD on, though. That's one I definitely want to do a little bit more DD on. Maybe it's a good stock to wheel as well if the premiums are there. Oh, I forgot. We're gonna have TJ on today. Let me send him the link. Let me confirm with him. Good for today. He should be on today. He'll be on at 10 a.m. and we got a lot to talk about the options because he did a ton of stuff this week with options. On. Yes, On is another one. This one is rising. This one's a much more premium shoe brand. This one, $38. This one, it dipped to 25 or it dipped to 28-ish on their earnings a month ago. And that was a good dip because these guys are killing it. Their shoe brand is amazing and they're really showing the numbers to back it up as well. So On is another one that's been doing really good. Okay, we got Palantir. For those that missed the Palantir deal, I talked about it in the first 5 minutes of the stream. It's a deal with an IT services consulting firm that's helping implement Palantir software for clients. Palantir at $20.78 right now in the pre-market. Nice to see those deals, and hopefully we see a lot more of them in the future. Nvda, $1,045. Nvda not slowing down. It is up another $7 in the pre-market. Market continuing to give it momentum. GameStop is $18.50. It's up 1%. GameStop now below $20. So if you bought it that $64, $40 range, you are down. And then AMC right here, $4.63. That one also below the $5 range. Now, one of the things about AMC is they did that 45 million, not 45. They sold like, I don't know how many, 73 million shares at $3.45, and they raised 250 million. They did it at the right time because AMC has kind of gone nowhere. Roaring Kitty's not tweeting anymore. So I'm actually kind of sad about it, dude. I really wished he would have kept tweeting and kept like this game going because it just would have made things so much exciting and fun if we had him continue to do, like play the game he was playing. But he stopped, and as a result of that, we didn't continue to get the run. But it would have been nice to see him going. But I guess because he stopped, now GameStop and AMC are also in a little tough situation. And I don't know what gets them to get back there. Faraday Future, that one, another meme stock. Let's check on that. That one is up 15%. That one's been struggling at $1.37. But if it stays above $1, maybe that's all it needs to not get delisted. And that could be one of the catalysts for something like a Faraday Future. Now, we did have Intuit earnings yesterday as well. Their numbers were really good. But one of the things that we're starting to see about these companies, Intuit is down 6%, even though their numbers were up and they increased guidance 13% year over year, is Intuit's at a 40 PE, growing 13% year over year. Nvda, growing 300% year over year, is at a 42 PE. So I think a lot of the market started to, and I think that's why Intuit fell yesterday. There was nothing wrong with the numbers. The guidance was increased, share buybacks, all that stuff. It was just the market realizing, dude, do we really want to pay 40 times price to earnings for a company growing less than 20% year over year, not giving us a dividend? And we're missing out on that capital being allocated to one of the biggest AI names in the world. And so if you've been holding Intuit for a long time, that's great. That's fine. Maybe you can average up, take some profits, whatever. But if you're establishing a new position or you have an average that's like close to the current price, a lot of that money, I think, is just selling it off and saying, well, let's get into Nvidia. They're about to do a split. We're going to get more shares, blah, blah, blah. And like, maybe it's a better use of our capital. And so I think that's kind of some of the issues that we have right now in the context of all these companies that are reporting decent earnings, but just not getting the momentum. Speaking of fintech companies like Intuit, I think you could classify Intuit as a fintech to an extent. I'm pretty sure I would say they're not like a SoFi, PayPal type of fintech, but they are a financial technology company. Cathie Wood bought a fintech yesterday, 100,000 shares of PayPal. What are your guys' raw thoughts to this? Because I saw this yesterday, and as you can see, she's selling the crap out of Teladoc. I mean, she is selling so much Teladoc every day. So it seems like she has admitted defeat on Teladoc. Teladoc was something she was buying, closer to $100, $150 a share. Actually, more than that. I think it was like $300 a share at one point. This was at the height of the pandemic. Everyone thought everything was going on the internet, on Zoom. Teladoc is now $12 a share. So she has admitted defeat on Teladoc. She is selling hundreds of thousands of shares a day. But now she's buying PayPal. And it's so interesting to me, dude. I think she spent about $6 million yesterday buying some PayPal. Like, PayPal's not innovative at all. We know PayPal's not innovative, right? It's in the ARK FinTech Fund. This is a growth innovation fund. First of all, I don't know why Teladoc was in the ARK FinTech Fund, but why is she buying PayPal? Does she think there's deep value there? And is she going to establish a big position? Does she think the company's, doing so many buybacks that it's worth getting it? I don't know what her thesis is here. I would love to hear about it, but because ARK doesn't seem like the type of fund that goes to find the most undervalued stock on a DCF free cash flow basis, right? They kind of just see like, oh, is this thing going to go to the moon? Okay, buy 1 million shares. Like, that's kind of the way they kind of think of this a little bit more. PayPal is definitely not going to the moon. PayPal hopefully gets like $100 if it can come back. So it's really interesting buying this one. Why does she move things so much if she's all about disruptive tech paying off? Well, that's the biggest question we have with Cathie, right? I mean, I think for Teladoc, it's okay to admit defeat, but a lot of people are probably wondering why it took so long to realize it. PayPal USD, bro. Oh, so the stable coin they're doing. I don't know if that's innovative enough to get Cathie excited, dude. I don't know if that's innovative enough, but that is something. I guess maybe they could be thinking about PayPal will do ads in their app. Oh boy. Didn't she buy Tesla right before earnings? She did. She got Tesla right. She got it at 140, 150. She was buying it. And I mean, I think she called that one pretty correctly, at least for the earnings play. Now, as long as Elon gets his compensation package, I think Tesla should be able to maintain this momentum. But that is one of the things that we saw that she did that was correct this year. It's just the others haven't been the best. ARK's ETF this year has not been the best either. I mean, it's been a really big year for the markets, dude. And the ETF is down 13% year to date. And it just sucks. It sucks because there's a lot of money in this ETF, about $6 billion. And it's down 13. I mean, the S&P is up 11%. ARK is down. The whole job of an ETF is to, outperform a bit. And then you can't even say over the past 5 years, because over the past 5 years it's up 4%. The S&P is up, I think, 85% over the past 4 years. The S&P over the past 5 years, 86%. Yeah. So it's not really been the best in the context of ARK. Maybe that's why PayPal's selling off. Oh boy. I like PayPal. I like it. I have some money in it. We're just trying to figure out when the hell it's going to start to move a little bit, because it has not been doing that yet. Nvda 1,049. PayPal right now in the pre-markets 61.82. Wow, that thing is close to going below 60, dude. That's not going to be nice to see if that happens. Okay, a couple of different headlines for you guys. We got 5 minutes until the market open. Canada retail sales are down month over month in the month of April. Retail sales in Canada are expected to have surged by 0.7% from the previous month in April of 2024. Considering March retail sales edged 0.2% lower from the previous month. Oh, sorry. Canada retail sales are higher. I didn't mean to say they're down. They're higher month over month in April. So that's good to see. Retail sales are going higher in Canada. In the United Kingdom, retail sales are down month over month, 2.3% in the month of April. This is probably another reason the Bank of England is going to do rate cuts, because they're seeing that consumers are starting to spend a little bit less, and that will help them with their monetary policy. It was the biggest decrease in retail sales in 4 months, with sales volumes declining across most sectors. Sales at non-food stores were down 4%, namely clothing retailers, sports equipment, games, and toy stores, furnitures as well. Furniture stores reporting poor weather and low foot traffic. So we are seeing across the world a little bit of weakness in the consumer, even if it's not gigantic, which hopefully does lead us to get a rate cut in Canada as well, or not Canada, but the United Kingdom as well. And then we got Mexico. Mexico's trade deficit widened to 3.7 billion, up from 1.6 billion in the same month, in the same time of 2023, well above the market expectations of an $800 million gap. Imports increased in Mexico 15% year over year to 55 billion, with a 19.8% rise in purchases of non-oil goods and a 28% decline in oil imports, which makes sense given everything we've seen from Iran and how much oil that they've been exporting as well. So Mexico starting to import a lot more, and uniquely, Mexico last year imported 23% more than China imported to the United States. So Mexico starting to become one of the more dominant players exported more in regards to getting things out there into the world, especially because the factories and the manufacturing warehouses happening in Mexico are starting to ramp up compared to what's happening in China, along with the political atmosphere in Mexico being a lot more friendly than something like China. Anthony Noto, SoFi, he bought 29,800 shares yesterday at around 12 p.m. SoFi right here, $6.86. We are below $7. He bought his shares at $6.91. He spent 200 grand. He has now 14 million shares, I think, of SoFi, roundabout. He's been buying since below $9, $10. It's either $14 million or 14 million shares, but he has a decent position. I guess the question is, when SoFi actually makes a move to the upside from this, and I guess we'll see, because as of now, it's been kind of stuck. It's like there's not that much more that you can say on it. I vote for green today. Yeah, put in the chat. Do you guys think we'll have a green day or a red day? Green day or red day? Put in the chat. We got 2 minutes until the market opens. Let's see what happens. We'll have TJ on in just a little bit, where he'll be talking to us he'll be talking to us about what's going on in the options market, and then we'll be hearing from him. I think, I want to say it's a green day, dude, but it's been a green week, and I kind of feel like things could go red, especially over the weekend. Fridays are usually red. Yep, they're usually red. Also, there's a bit of instability potentially around the world on Friday or over this weekend. So we might say, given the China-Taiwan stuff, so that stuff might be another reason people sell to not hold over the weekend. Also, we don't have Monday, the markets, right? It's Memorial Day. People might take profits before Memorial Day. We will miss you Monday, man. Dude, I'll be back on Monday. Also, today I'm coming out with an interview you guys will like. It's with this girl who's building a startup using Palantir software. So I think you guys will really like that interview. So that'll be out today. You guys will be able to watch that. It's like a defense tech drone company with AI. It's super cool stuff. So I think you guys will enjoy it. But Monday, we'll make sure we have another interview. Also on Sunday, I'm going to be having Howard Linzone. I might be saying his name wrong. He is the founder of StockTwits. This guy, he'll be on the channel on Sunday. This guy is literally the reason for why online investing media exists. Like, he started the first online investing show. Like, we have this Market Open show. He started something like this in 2008. So it's going to be super cool to hear from him and see his perspective. He also angel invested in Robinhood, so it'll be really, really fun to talk to him on Sunday. So that'll be an interview. And then Monday, I'll be sure to be here, and we'll do something on Monday, even if it's not in the morning. All right, it's 9:30 a.m. It's Friday. We are here. The stock market is now open. Wake your ass up. We are here. I want some brownie pancakes. SoFi, $6.89, up about 1% on the day. Robinhood down about 0.11%. Lululemon 301. GameStop down 0.34%. PayPal 61.93, up a little bit, but still below $62. Where is Nvda? Nvda continues to do what it has to do. $1,042 on Nvda. Just incredible, dude. It's not stopping. It is not stopping at all. Nvda, 1,043. BJ says there's some insider buying on PayPal. Okay. not bad. Nice to see it. I'll try to pull that up in a bit, but nice to see that PayPal is getting a little bit of momentum there with some people deciding that it's undervalued and buying stock. We saw Hims as well. One of the senior execs bought some stock in the past 2 years. He did his first buy yesterday. So that's good for Hims as well. 1,041 on Nvidia. Looks like it's staying stable there and it's not really going away. An entire 9.8% increase since earnings doesn't seem like it's being sold off, at least just yet, even though the entire markets were sold off yesterday. S&P 500, 527. We saw the S&P go from 533 to 525 last night based on those Fed minutes. Was that justified? Probably not, but it was irrational, as it always is. 527 right now on the S&P 500. And again, more inflation data coming down. Oil is down today. Money market funds have gone up. That's going to be good for the broader markets and hopefully good for the S&P as well. Apple at 188. We'll talk about Dan Ives in a second. He has upgraded Apple to what did he upgrade them to? He upgraded them to 275, and he says the AI super cycle upgrade cycle is coming for iPhone 16. So if you believe that he's right on that, then we're going to see 275 by the end of the year on Apple. Pinduoduo, that one is up another 4%. Again, they had a good earnings, so it makes sense that they're up. I'm actually surprised they're doing as well as they have, given that Alibaba and China itself has not been in the best situation. Alibaba right here down, wow, another 0.6%. It was at $90, now it's at $80, struggling to hold $80 for Alibaba. Again, the China-Taiwan stuff has not been the best, but we'll see how that one continues to play out. 10 years up, Hims is up. Well, let's see, Hims, where's Hims? Hims is up 2.38%. The 10-year, let me pull that up. It was up slightly in the morning. Is it gone up a lot more? It's still slightly, 4.49, nothing too crazy. So that's okay. Tim says no need to ring the bell for so damn long. That's how I know you guys are woken up, dude. We got to wake up. It's Friday. We got to wake up. eBay, $53. That's up 1.7%. SoFi, a little bit of momentum, a little green on SoFi, 1.32. So SoFi is a bit green, 693 on the day. Palantir, $20.79. Palantir below 21. Nvidia now falling just a little bit, 1,038 from 1,041. AT&T is at 1754. Verizon, 3958. Elf Beauty. This one had an incredible earnings. SMCI 848. Elf, are they still up? Elf's up another 3%, dude. Holy crap. Imagine if you got the dip at 139 on Elf when it fell on earnings. And now it stayed there for like a couple minutes. Now you're at 190. Incredible with Elf. Absolutely incredible with Elf. Where's Robinhood? Robinhood is down today, 1911. So I think there's a couple reasons affecting Robinhood right now. Number one, Bitcoin being down has not been the best for Robinhood. So if we look at some of the crypto stocks, they're not all doing the best. Well, actually, they're actually doing okay. Yeah, look, CleanSpark's up a little bit. Riot's up a little bit. Hut 8 Mining is up. Cypher's up. Okay, so the Bitcoin stocks are doing okay. Robinhood might be suffering a little bit because Bitcoin came down. Ethereum is down 2.24%. The other reason, and I think this is the main reason Robinhood's down, is because them decreasing their margin lending rates. I think the street is thinking that's going to hurt their net interest revenue. That, like, as soon as they did that, that's when Robinhood actually fell about 2% 2 days ago. And I think the street's wrong on that, because I think Robinhood did the math and they were like, hey, we're going to get a lot of more volume that's going to make up for the loss of the actual interest. And that's going to drive a lot more deposits, gold subscriptions, etc. So I think Robinhood's playing a little bit of chess here, knowing what they're doing with the margin rates. Whereas the street thinks, oh, if you went from 12% interest to 6% interest, you're going to lose money, which is correct. It just might not be the full picture. And so that might be the opportunity that Hood's having here based on how the street's thinking about it as well. Ulta has earnings next week. That is true. And if Elf is an indicator of where makeup's going, Ulta's up a little bit right now. If the market correlates both of them together, which it seems like they're not doing, but if they did, maybe Ulta gets momentum as well. You know, maybe Ulta continues to see different way of thinking of makeup this year, given their guidance wasn't the best already. Should we buy Robinhood here? Look, I like Robinhood at $19 because my price target is 25 for the year. Do I think you could get to 17 or 18? I think it's possible. I just think it's going to be hard to get there. So, to me, I think Robinhood 25 by the end of the year is very possible. I think going back to the 16, 17, 18s, the entire market would have to take a crap, which, look, we've had a really good market the past 2 months. If the market takes a crap, I wouldn't be surprised. I just think it would recover from there. So I don't think the street's going to let this bad boy get back to the 16s and 17s again. Could it happen? Yeah. But I think at 19, it's not the worst gamble in the world, especially because we know their main metrics are going to be amazing, right? But right now, it looks like it's headed below $19. And if that's the case, there may be an opportunity to get it in the high 18s. Oh, Meet Kevin. I forgot to mention. Thank you guys. Meet Kevin bought Robinhood yesterday. And what's so interesting about this buy, I was on the market close yesterday and I got the notification and I was just like, very interesting. He also bought Snowflake and he bought Microsoft. And I was, it was really interesting to me because 4 months ago, he told me that Robinhood's crap and that no one should buy it. So here's him giving the bear case for Robinhood in January. And he changed his mind apparently yesterday and he bought 2% of the fund in Robinhood.
So you are not bullish in the next 5 years, fintech over chips, you would say?
No, chips for sure over fintech. My opinion, mostly because even when you get into a lower interest rate environment, the squeeze you're going to get on fintech is going to be nasty because most of the fintechs you see right now, the reason they're profitable is because of net interest revenue.
Correct.
But that's going to plummet as
Correct.
rates come down.
Correct.
So I think people forget that like the only reason Robinhood's like knocking on the door of profitability now is net interest revenue.
Well, I was going to ask on that's an interesting one. Cathie has a lot of that. Do you not think transaction revenue will be higher like it was in 2021 to off balance the lack of interest revenue?
No.
By the way, I was right about that. That we made $157 million on transaction revenues on crypto last quarter. So I was right about that.
No, most of their revenue is from options. And so you need speculators. And
there's a lot of speculators, bro.
You really need years of people making more money on profitable trades to induce more trading.
Right.
So the pandemic was perfect for that. But otherwise, it might be like a 10-year cycle where people like, okay, I'm finally making money in the stock market again.
Right.
And you need to sustain that for like 5 or 10 years to where you really get the FOMO crowd back in. I don't think it'll be that rapid. I think a lot of people will actually be or have become so shell shocked to the stock market that they just don't want to be a part of it anymore.
So before I went and interviewed him and heard his bear case on Robinhood, I already had like $50,000 into Robinhood. So I'm listening to him give me this bear case. And in my head, I'm like, this is fucking stupid. like literally while I'm listening to him say this, he sounds smart. I love Kevin because he sounds really smart. But while he's giving his bear case and he's like, oh, we might need 5 to 10 years for people to have the money to bet on stocks again. I'm listening to him like, dude, this is fucking dumb. Like, what are you talking about? This is the dumbest thing I've ever heard. Robinhood was $10 at that time. I was like, no, you're wrong. So I had zero I should sell because Meet Kevin's so smart. And he said Robinhood's trash. I was like, no, this guy's dumb. On this topic, he's dumb. On a lot of things, he's very smart, right? He's a very smart guy. But on Robin, I thought he was dead wrong. And I was right. He was dead wrong. Dude, you do not need 5 to 10 years of market momentum for people to feel active like they want to trade again. Like, I just didn't buy into that narrative. But he sounded smart when he said it. It just didn't make any logical sense. Also, they make so much money on options. And his argument is you need years for people to get excited to trade options again. It's like, no, you don't, dude. Like if we get into a market where there's momentum, the S&P goes up 10%, people are going to want to trade options. And so now he's buying Robinhood, and I like it because he's starting to realize, well, maybe wait a second. If this is the best way to play the bull retail market on a company that's relatively cheap at $16, $17 billion with $5 billion in cash, maybe we should get a little excited for Robinhood, right? And so that's what we saw in the context of Meet Kevin and what he made, the moves he made yesterday. All right, cool. So that's what we got in the market, guys. There's nothing crazy going on today. The market's relatively flat. We got a little bit of momentum. Nvidia's there. S&P is at 527. Overall, we have some green, little pockets of red. Bitcoin at 67,000. Nvidia now falling just a little bit, down 0.5%, but still above $1,000. It's a Friday. Nothing too exciting on a Friday. And, we're seeing a relatively green market with pockets of red. And we'll see how that ends out later throughout the day. We're going to bring on one of my good friends for the next 40 minutes and discuss everything that's going on in the options market as well. You guys know him as Mr. TJ, the Wheel Deal. TJ, what's up?
Hey, what's up, bud?
What's up, man? How are you?
I'm good, dude. I am good. Just woke up about 25 minutes ago. Did not have any luck this morning, but last night was good.
For those that watch,
always be trying, baby. Always be trying, Amit. I'm giving you some valuable life advice this morning.
Always be trying, guys. We'll do word of the day at the very end. We'll do word of the day at the end of the show. All right, TJ. So you had an exciting week. We got a lot to talk about in the options market, but you actually traveled somewhere this week. Where did you go, and what were you kind of doing in different parts of Texas?
So I went to San Antonio because my son we'd ordered a Tesla, a Model Y, and I needed to. Just thought it was crazy because I had to co-sign the note because there was a 1% APR. There's like a promotion, I guess, for I don't know how long, but essentially you get 1% financing for 5 years on the Model Y Tesla, only on that model. They haven't rolled it out. They haven't rolled it out company wide. And my son had just tried to do it all on his own, but he got like 6%. And it was going to be like $125 a month difference. So I was like, I'll sign paperwork for $125 a month for 5 years because that's just stupid, not to save that money. So flew over there, and then I had to pick up the car, my old Jaguar, because I'm going to give that to my dad. So we were there for 3 days. He did me dirty, bro. The car, the Jaguar, he's been driving it for a couple of years, and that shit was a mess, bro. Like, the steering wheel was shaking. you pumped the brake, and it was shaking. So I started digging through the glove box, and dude, there's like a list of shit that Jaguar is telling him is wrong with the car.
Yeah.
And Jeremiah is driving it like he don't give a shit. You know what I mean? And Kristen's like, I ain't getting in that thing. So she booked the flight home. And she was just going to bail on me, bro. She wasn't going to be my ride or die. You know what I'm saying?
I don't blame her.
I was like, well, how about we take it into the Jaguar and see what they, because there's going to be things that should be done and things that need to be done. Let's get the things that need to be done. So we did that. $3,300 later, she's riding with me back home last night in the car.
I love it.
And here we are, man. So it was good.
All right, so let's pull up the portfolio and see what we're working with. We had a lot of moves this week, a lot of moves you made a unilateral decision to do, even though it's my money, but you decided to make the move.
So before that, though, what I want to do is for people that have been following is I want to ask them in the chat, how much premium do you think that we've collected since we started this project so far? Because I've got the big scoreboard already.
Okay.
I've got premium collected. I've got buybacks, meaning premium that we've given back to close positions, rolling or just close, etc. And what's our net premium? Like, how much money are we sitting on that we've collected and that we've kept? Like, what's the bottom line? And I call it the Project X scoreboard, if you will. So that's the one that I want to start every show with, Amit, if that's okay with you.
Yeah, let's do it. That's a good check.
So that people can kind of follow it. And this is not a fancy spreadsheet because I ain't your boy. You know what I'm saying? This is just real basic. It's going to say total premiums collected minus the buybacks. Is he going to equal the total net premiums? Keep in mind, we only started with like 100K or so when we first started, and now we're up to 500K. So we scaled into it. So keep all of those things in mind. And this is going on about 5 weeks or so.
Yeah, about a month. About a month we've been doing this. Yeah.
So
we got some guesses: 11,000 from Alex, 10,000, 7,000, 8,000, 13,000. Okay.
So here we are.
Okay.
So we've collected. You can walk them through it. I mean, it's pretty self-explanatory.
33,000 in premiums. Buybacks, what we have to give back to the market to close the positions. So once you subtract the premium minus what we had to pay to close the positions, we collected $18,000 in 5 weeks, right?
Yeah.
That's not bad, dude. That's pretty damn good.
Yeah. So there's still some outstanding trades. So this is going to be a sliding scale. So every week before I go on, it's just a game of addition and subtraction, guys. Yeah. But what I'm trying to show you guys here to demonstrate with my, Excel prowess here is that, and I'm sure once Bill White sees it, he's going to take pity on me and this shit's going to look legit. He'll make it look like a fucking NFL scoreboard. You know what I mean? Because that's how we got to the wheel deal tracker, guys, is Troy Hutch took pity on my spreadsheets and now we have what we have. And then Bill White took it to another level.
And by the way, if you want the spreadsheet, amit@dailypalantir.com. I sent it out last week. If anyone wants it, just email me.
So anyway, so now let's go over to the actual portfolio, if you will, Amit. So who was the closest in the chat, Amit? Did you see?
I think Gene Phillip at 25,000. That was the closest.
So that's about how much outstanding premium we have because we have some open trades, and we'll talk about that.
Yeah.
We'll talk about that. So, Anyway, we got here we got in NVDL. It's the 2 times leverage play. I told you I wanted to gamble a little bit on the earnings, right?
Yeah, let's start with this. So you texted me like an hour before earnings, and you were like,
Yeah.
"Hey, we're gonna do this." What was the logic here? What was the thought process? And explain it to everybody.
I just felt like the writing was on the walls, guys. Nvidia is going up and to the right. I mean, I want to say, again, I'm not a numbers freak like you guys, but I want to say a little over a year ago, they were doing like 3 billion a quarter, 3 to 4 billion a quarter. And now they're doing like over 20 billion a quarter. It might be like 22 billion a quarter.
Yeah.
So that's like penny growth stock. You know what I mean? Like that's like the type of shit that you see from a company that's worth a couple $1 billion, but this company is worth, over $1 trillion. So it was just like, this is insane. And if you start looking at the fact that there's other big companies they rely on Nvidia for their business to flourish. It just seems like Nvidia, there's not going to slow down anytime soon. You have like Facebook, like we're going to manufacture our own chips or whatever, but like how well does that really go, et cetera, or Apple or whoever is, saying is we're going to manufacture our own stuff. But at the end of the day, dude, Nvidia owns that space. So I just don't see it slowing down, Amit. I just truly don't see it slowing down. I totally missed the entire boat on Nvidia, so I just wanted to get our little piece of the pie, if you will. that was the basic logic in a nutshell. Your microphone.
Sorry, I was muted. Why did you do this on NVDL over Nvidia itself? What was the logic there?
Because I didn't want to have to tie up $100,000 or so to be able to sell a cash secured put. Versus here, this was a $19,000 in collateral to pick up $685 in credit.
Okay, yeah, let's look at the actual play right there.
So this was the play right here, and it took a little while. It was 2 because it was hard. So I got 4 contracts filled right away at 140, but I wanted 5 contracts, and then I got the 5th one filled at 126. So that's how that.
So you were betting Nvidia would not tank, which means NVDL would not go to $38 a share.
Correct.
And you sold someone those puts who did think Nvidia would tank, and NVDL would go to $38, and you collected
$685.
$685 premium. Yeah, it's not bad.
And now we're good. So the only reason that I haven't closed these out is because this is one of those tickers that everything's in 5-cent increments on Robinhood. So 5 times 5 is $25. So I'm like, dude, the chances of this happening according to this delta right here is, you know what I'm saying? Like, I'm just like, well, I'm going to just roll the dice because I got to maximize the win here and let's get the extra $20. And also on the flip side of the coin, Amit, it wouldn't be the worst thing to take ownership of this ticker right here at $38, and then we just try to ride them back up to 45 and make more money.
Yeah, I mean, NVDL is $51 right now, so probably not going to 38 today.
Yeah, so that's it's just like, why am I going to give Mr. Market any of this money back?
Yeah,
that's the logic behind holding this one. But now we have our first real decision on the channel, Amit. The first Project X decision that's a little bit of the head scratcher, and I want you to think through it. I'm not going to do any talking. I want you to walk me through the Shopify that is expiring today. I'll pull up the trade. Walk the audience through this trade. What do you see, and what do you think we should do?
All right. So we did, expiring today, a cash secured put for Shopify at $58. Currently, Shopify's stock price is $57.49. So we are in the money on this. And we're down 30%, down 320, which means if we let it expire worthless, we would be owning 2,000 shares of Shopify.
So it's not expiring worthless. It's expiring in the money.
Oh, sorry.
Expiring out of the money, it's expiring worthless.
Right. So it expires in the money, 2,000 shares at $58 we would be buying today.
And what is Shopify trading at currently? Does it tell you in that little score?
$57.49.
Yeah. So it's right at our break even, Amit. So it's kind of this is the scenario, right? Like it could kind of go either way for us because we take ownership. It's kind of like right there at our break even. So we're not really down that much per share.
And
But
real
it
quick, for
tanks.
those that don't understand break even, the reason our break even is 57.38 or 57.48 is because we collected the premium minus what we're paying for the shares. So technically our average is not 58. Our cost adjusted average is 57.48.
Right. So we're taking into account the 52 cents per share that they paid us for the contract.
Right.
So you subtract the 52 from the 58 strike price, and that gives us the 57.48 break even, just to clarify that. So Amit, there's two options here. One is my favorite option is do nothing, because that's the easiest option. So you're okay. Presumably you're okay with whatever outcome. You're okay with either owning the shares or not owning the shares. That's option number one. Option number two would be to roll this position a week, 2 weeks, a month, either keep the same strike price or maybe improve our position by lowering the strike price to take some risk off the table. But we still want to try to collect some premiums, because if we roll and we don't collect premiums, what happens is you start killing your ROI. And if you're doing this for like other investors, the only thing they're going to judge you on is this is how much money we gave you, and this is how much money you fetched us as a return. And they're not going to look at any of these decisions along the way. That's just a reality if you want to be a hedge fund manager. Nobody gives a shit about these decisions. They only care about the results. So what are you thinking? Like, where's your mind at right now?
Have you ever been to Texas Roadhouse?
They just built one here in where I live. And yeah, I have been there, just not to this new one.
Okay, so Texas Roadhouse has the best rolls on the planet.
They're those Hawaiian type rolls from Thanksgiving.
So good with the cinnamon butter. I think, dude, I mean, I don't think we need to take ownership yet of Shopify. I think it's in this range. I think it gets above 58 in the next couple of weeks. Let's roll this motherfucker. It's time.
Okay, so here's another question for you. Not so fast, my friend. Why don't you want to take ownership of Shopify if you think that it's going to go up? Because we will make a lot more money owning these 2,000 shares. For every dollar that it goes up, it's $2,000 to the bottom line. So this is where I want to challenge our mindset a little bit, because there's a lot of wheelers that will never beat the market by a substantial level because they're just not interested or willing to own shares of stock for any duration of time. And God bless them. They're not going to be susceptible to drawdowns. They're going to sleep easier at night, but they're never going to have outsized returns, or whatever the terminology is. They're never going to crush the market, in other words. Like in some years, dude, I'll have 30, 40, 50% return on my capital because I take ownership of stock and I write them up as well. Capital appreciation will make you a lot more money than selling cash secure puts and cover calls ever will if you're in the right situation.
I think for me, and guys, the email is amit@dailypalantir.com. I'll put in the chat. That's the email for the spreadsheet. I think for me, I don't have the most conviction in Shopify as I have for like a Palantir or a Robinhood. So that's 140 grand or something we'd be putting into this thing. If we could roll, and I do think Shopify will be above 58 our strike within the next 3-4 weeks, so I don't think it's an issue, then that 100 grand could go into stuff that I actually care about a little bit more at this moment.
So the one that I would be real interested in rolling would be to this level right here, because we have 2 other positions in Shopify expiring next week. We have some at 60 and we have some at 68. So we can keep this one over here so we can bring some money through the door. So we can roll this one an entire week, keep the same strike price, because I heard you mention a couple of times that you think it's going to go above 58.
Yeah.
And we can bring in another $1,200 or so.
Yep.
And
I think that's fair. And again, if I really get like, if this is Robinhood or Palantir, I wouldn't care, because then we could sell cover calls against it. I want those shares, but I just don't care about Shopify that much. It's a sweet sleep well at night, but it's not one of those that I love. You know?
So I think there's more to what you're saying, guys. So this is a nice teaching moment for the audience. I really think what Amit is saying, he doesn't like Shopify that much at these prices. Yeah. If this was at like a 48 instead of 58, I think we're singing a different song.
100%, 100,000%.
So entry points matter.
Yeah. And it fell 25%. So I don't feel uncomfortable owning it at 50, because I don't think the downside is like $30, $40, but I'm not in love with Shopify. You know?
Yeah, because everybody says, oh, I have super high conviction. And my mind says, no, fucker, you have super high conviction because you have a real good entry point.
Correct.
Because I don't have super high conviction on Nvda right now. I got to buy the shit at 1,030. If I owned it at 500, oh, Nvidia, Nvidia, Jensen, oh, Nvidia, leather jacket, oh my God, let's go ride in my Harley, Jensen, oh my God, Nvidia, right? Because you got it at 500, fucker, let's be real. But if you're over here, like you got it at like 970 and you're like, man, well, I kind of got money, but it's one bad day from all going away, you don't really have high conviction because your entry point's not that good.
Yeah, dude, everyone's singing Nvidia's praises. They're sitting on a hefty margin of safety with their average. And if you're sitting there at praises and you have $1,000 average, you just want to be part of the party. You know what I mean?
Yeah. So anyway, I mean, I just want to put things in perspective for you guys because the stocks that I have the highest conviction in are stocks that I believe in, but I also have a pretty legit entry point.
Yeah.
Because I'm like, well, I got a lot of wiggle room here, so it's easy to be convicted when things are going your way. You know what I mean?
Yep.
So when things aren't going your way and you're bag holding Palantir for 3 years at $19 and the shit's at 8 or 9, that's real conviction. You know what I mean?
Yep.
That's when you're like, oh shit, I got to manufacture the win.
I agree.
Let's roll this bad boy a minute and call it good.
All right. So that's 58 we're rolling it into for next week.
So we got to try to get it filled. So we're probably going to have to do 60. Let's see. Well, let's get a little greedier than that now. So let's go 61. Let's try 62. This is like an auction. So 61, just to try to get it done here for everybody in the chat. Let's see if we can get it done here. I don't think it's going to happen. We'll go 61 and then we'll go from there. So essentially what we're saying is we're okay at 58. We're just not okay on 524. We're okay. We're better at 531. That's essentially what we're saying. We're just changing the terms of the contract a little bit.
Yep.
So we'll go there and see what happens. You know, we'll let it stew a little bit. If not, we'll come back to it and we'll go 60, 59, whatever we got to do to get it done. But right now we'll just we put the timer in the microwave, if you will.
Can you answer why someone says why are you doing weekly over monthly on the roll?
I just wanted to match it up. I wanted because we have other expirations on Shopify. We have 60 and we've already got 57 that all expire on 531 as well. So I just wanted to match up the expiration dates for my OCD, and it's just easier to manage. And then it's kind of like now we have like a real serious D-Day on Shopify next week, because what if Shopify is sitting at like 59?
Right.
And we only have 10 contracts at 60. I can be like, well, we already won these 58s and the 57s. Maybe let's take, and there's a little bit more mojo, more momentum with the stock. Let's go ahead and take ownership of these at 60. Let's ride that wave up, and we'll keep selling 30, 40 contracts over here at 58, 57 to continue lowering our cost basis. But now we're strangling the stock because now we can sell covered calls and cash secure puts simultaneously. And we're also qualified for capital appreciation. We didn't get the best entry point at 60, but you know, it was trading close to 70 or whatever not too long ago. So that's a possibility as well.
Dude, when you talk, it's like you're rapping. You're just in a flow.
I mean,
you're like in the studio. You're in the studio, and it's not that you're rapping fast. It's that like you're spitting bars while you're rapping. You know what I mean? You're just flowing. You're in your zone.
So that's you know, hopefully you guys get value out of that. But that's the thought process. Is I want to, you know, people think, oh, you're just throwing dartboards. I mean, there's always a lot of strategy behind what I do. I'm just.
No, I think it's a good point you break that down, because some people are like, oh, you're just like throwing shit at the wall, and it's like no, you understand exactly why you're doing what you're doing,
right,
with the time frame.
Because I do think that it's going to go above 58, and I'm going to be a little bit irritated because we didn't take ownership of any shares. But since we have the ones at 60 that would still be in the money, I'm like, well, maybe we could take ownership of those, or we can continue rolling those 60s to maybe like 59, 58, and eventually take ownership of some shares. But when we have like a $15,000, $20,000 buffer in premiums that we've collected, then we've artificially manufactured that entry point in the low 50s that we're hoping for all along.
Correct. Even if your Robinhood doesn't say your entries in the low 50s, you know, given the premiums collected.
Yeah, that's why it's important to have a scoreboard, right?
Yeah. Okay.
So there's that, man. How we doing so far? Pretty good?
We're doing good. I think people are liking it, guys. I just put TJ's YouTube in the chat. Please make sure to subscribe to him. He goes live on his channel about a couple times a week and talks through this even more in depth on just his channel. So please make sure to subscribe. Robinhood. What's going on with Robinhood here?
This one was at like 60%. When I was in San Antonio, I thought about bothering you, but I was busy. So essentially, well, you can walk them through it a minute. Here's the.
Yeah. So we sold $17.50 puts for June 14th. Robinhood did go to $21.50 at one point on Tuesday. So they started to really pick up momentum. Right now they're down in the high 19s, which we were stuck at 18 for a while, so it's nice to see it in the high 19s. But we are absolutely out of the money, so we're doing good. I think 17.5 by June 14th is probably not going to happen, so I think we just leave these. But we're up 30% right now on the contracts.
Yeah, I think this is just a wait and see situation right now.
Yeah.
If we look at the Greeks, it's a 20 delta. So for every dollar in movement up or down, we're gaining 20 cents on our option price or losing 20 cents. And that's our option price right there. And that's also the probabilities of ownership versus not having expiring out of the money versus in the money. So there's 20% chance that it would expire in the money and 80% chance that it would expire out of the money. So I like our chances all the way around, and we just got to do nothing and wait for theta decay to do its thing.
Yeah, I agree.
We're in a very commanding situation there. Then here's another one I put on. Amit, did I tell you about this one right here? Let's talk about TSLL. I've been a bad boy on TSLL, Amit.
All right, so walk us through this entire week. You've had a hell of a journey with this one. So what's happening?
So TSLL on May the 20th, you didn't know. This was unbeknownst to Amit, guys. I sold 200 cash secured puts at $7. May the 20th, expiring for $6.14. So we're talking about $140,000 in capital. Mind you, we've only allocated $500,000 for the project. Brought in $8,400. And then I was on the plane. We had already flown from the Rio Grande to Houston because there was a connecting flight because we can't go straight to San Antonio from here, which is kind of silly, but that's just the way it goes with Southwest. And sitting on the plane, and I was like, dude, I better lock in this win right here because it doesn't even know about this trade. And the last thing I want to do is blow up this part of the account. So I locked in $1,400 win for you. I gave back $7,000 and we locked in $1,400 and that went to the scoreboard already. But then yesterday I opened it up again because I was like, well, if I liked it at 7, I should be able to 11 it at 650. So I opened up 100 contracts at 650. And picked up 28 cents or $2,800 collectively.
Well,
So
the thing is,
that one is currently open.
The day you closed it, Tesla went up.
It went up a lot.
And TSLL is a leveraged play on Tesla. So Tesla going up, we could have made 4,000 instead of 1,400.
No, we could have made more like and then Amit started talking shit on Twitter, saying how much money I'm costing and stuff. And I was like, dude, this shit could have gone south. You know what I mean?
I was like, who is this guy managing my money, bro? He's fucking losing me thousands of dollars a day now. What the fuck is going on here?
But what do you think about this trade right here? It's pretty chill now. You know what I mean? So now we sold for $650. Some of that money that I left on the table on the previous trade, but I think that now this is a little bit safer at $650 versus $7, and it's a 21 delta.
Yeah, so TSLL is 753. You sold for 650. I think it's relatively safe. And I think also qualitatively, Elon's going to get this compensation package passed, which means that's the biggest bear case to Tesla going to or TSL going to $5, $4. I don't think that's happening, dude. He's getting the fucking thing passed and he's going to be good. So yeah, I think this is a good trade. And how much did we collect on this? How much premium?
2,800.
And June 14th? Yeah. The announcement is June 13th, I think, on his,
yeah, but the idea is for us to be at like 70 or 80%. I can text you and then you can give me the go ahead,
right?
And stuff like that. So that's the thing. So a lot of these trades, guys, they happen online, but me and Amit communicate via text.
Yeah,
and we put these on. So it's not like totally in the dark whenever we're doing a lot of these things. But Amit, as y'all know, he's on YouTube 4 or 5 hours a day, and he's got life going on and stuff. So we're not able to communicate 100% on everything that's going on. So we keep, I got to keep him abreast because if there's a situation, like let's say Nvda is at 99%, mathematically it makes sense to close it out. I just didn't want to give back that extra $20 because we can fight for that easy money right there.
100%.
So I don't really, there's some decisions that the math tells you what to do. We don't really have to consult with each other for every little thing because the numbers will tell you what to do if you're willing to listen.
100%.
So that's all that we got going on, dude. As far as all of that goes, I don't see anything else. The only thing that I got going on in Mint is Riot. I posted something on Twitter to close or not to close. You remember that? You
Yes,
commented?
you did post that. Correct. So let's walk through that one. Yeah.
Yeah, so I had 800 contracts, 400 expiring at 950 and 400 expiring at $9 for 531, and that's already up like 70% at the time. This was like 3 days ago. So I was like, to post or not to post, and I'll talk about it on the next live. And what were your thoughts on that? Do you remember?
I thought it was a great idea because
A great idea to what?
to close at the day when you posted that. I mean, you could have kept it open as well, but the point is Bitcoin went up. Riot is a proxy on Bitcoin, therefore it printed. And so to me, closing that was not the worst idea at all.
Right. So I'd been collecting money, guys, on this thing. I'd started it on like March the 6th or something like that. It'll say here. And I started selling cash secured puts on Riot over and over. And then I rolled, and just money's been coming in via Riot.
And
So
why did you pick Riot out of the other Bitcoin proxies? Like there's CleanSpark, there's,
because Riot was the first one that had their infrastructure really together, and they had the best balance sheet at the time when I started rocking with the miners. But Marathon, the market loved Marathon more than all the other miners for whatever reasons, right? And the one that was outperforming all of them from the beginning was a company called Core Scientific, but they didn't have their shit together financially, so they filed for bankruptcy. So Riot was the king of dilution. I call them the masters of dilution. So they diluted the shit out of customers. So they had a real big balance sheet, a real nice balance sheet. Because everybody looks at balance sheets and they're like, oh my God, they got an amazing balance sheet. Why did they get it? How did they get it? Did the money just fall out of the thin air and go into their bank account? No, they probably diluted the shit out of you. You just don't understand how to look at this shit. Yeah. So Riot diluted the shit out of shareholders. They got a lot of money on the balance sheet, and they also have a pretty significant Bitcoin hodl that they mine themselves. Whereas Marathon has the largest Bitcoin hodl in the industry, but they purchased a lot of their Bitcoin. I don't trust their CEO as much as I trust Jason Les. So this was a CEO play more than anything. I think that Jason Les is greater than Fred Thiel.
How much money did you collect on this put premium when you closed it?
Yeah, so I would, between both of the plays, I had collected about 40.
Wow.
Because it was a lot of money though, dude. You're talking about 360 plus 380, whatever that is, K. So like 700,000 or some change, right? So I closed one out, locked in like 21,000, and then I have this one open here. This guy right here, the $9 puts, and we're up 79% on those. I have yet to close them.
Why not close those? You're up 80%.
Because the delta is 13, and I don't have anywhere else to put the money.
The only scary part about the delta on these is that if Bitcoin takes a shit, everything changes, right?
Right, but I'm also okay owning more Riot. I already own 20,000 shares at 11.21. So if I own 20,000 shares at 11.21, I should be loving the idea of owning 20,000 more shares at $9, because then that puts me at $10 and some change as far as my new adjusted cost basis, or average cost, if you will. So that's where I have a lot of leverage psychologically, is because I don't give a shit what happens with the contract, because I'm okay taking ownership, because I've owned those other shares for the better part of 2 years. But I tried to close these out. I was willing to give 4 cents to Mr. Market. Mr. Market didn't want to dance. So I'm like, okay, you know what? Fuck you. Now I'm going to go after all of the premium. That is really the mindset, guys. I'm like, I was willing to play nice, because I'm winning this trade in a real big way. I was willing to it's called pinging you in poker. It's like when I beat you a hand and it's kind of a dirty play for you, because maybe you should have won, but you didn't. And I'm like, here's a little $20, $30 ping. Go buy yourself a drink, go cry in your beer, that kind of thing. So I was willing to ping the market 3,200 or at the time, $4, whatever that is, $1,600. They didn't take it. I'm like, okay, cool. And now I'm going to go get the rest of that money, or I'll roll this contract and get even more premium and maybe go from $9 to age 50. And then I'm like, okay, this is the zone where I would really want to own these shares.
Right.
because I don't have anything else to do with the money right now, because this market, guys, it's getting very difficult to allocate capital, because on the one end, you've got all-time highs going on with the major indices. On the other end, we don't know what's going to happen with oil. On the other end, we don't know what's going to happen with the Fed and inflation. On the other hand, we don't know what's going to happen with China and Taiwan. So there's a lot of uncertainties out there. So you don't want to Amit's point earlier with Shopify, we don't want to be in a hurry to take ownership of stock right now. If we can keep making our money via cash secured puts and staying out of harm's way, that's probably the best play.
I agree. 1,000% agree. I mean, I don't think we're due. I think we could have a pullback. We don't have to have a pullback, but if we were going to have it, would anyone really get upset given how, much we've gone up? Like if we go 5% down, it could happen,
But even though the market's been mooning collectively, Amit, there's still a lot of companies, there's still a lot of stocks that are struggling, dude. The SoFis, the PayPals, there's still companies that aren't performing well when the market's at all-time highs. So there's still certain sectors of the stock market that are getting zero love whatsoever.
So can we talk? Let's end it off on SoFi. What the hell are you doing with SoFi? Because that thing's been stuck in the gutter below 7.
Yeah, I actually went live last night to talk about this. I had a candid conversation about my beloved SoFi. This is my second favorite stock in the entire market, guys. There's about 10,000 tickers that we can all trade. SoFi is my number 2. My number 1 is Tesla. Make no mistake about it. I am a Elon fanboy through and through. I think that the guy struggles to get the words out of me because he's just too smart, bro. It's like when Alex Clark speaks, they struggle to get words out because they got too many words in their brain. You know what I mean? Like for me, it's real simple to talk because I only got a few words. So SoFi is tough because there's a lot of dead money here. We've got 1.2 million tied up. If you go 792 times the 150,000, you're going to get to about 1.2 million, a little under 1.189 or so. And we are down on those shares, and that amount of money is only yielding this much in covered call premium. It's about 15 grand. Dude. It's about 15 grand right here. I collected, I'll see if I can.
So some schmuck actually bought an $8 call for next week.
Well, he's losing money. So essentially, I collected $15,000 on 1.2 for about 3 weeks, give or take. So I just asked myself, is there a better use of capital? Is there a better use of capital within SoFi? Now, this isn't a conversation where I want to give up on SoFi or anything like that, but can I control these amount of shares by going a different route, maintaining a very similar exposure? But now I can have optionality because I could free up maybe $750,000 by doing something else. And that's the conversation that I had on the channel last night. And I did conclude that there is a way to get that done.
Well, real quick, but before we get into that, why are the premiums so bad on SoFi? Because usually it's good. So what's happened?
Because the binary event happened already, which was earnings, right? So the IV is low. You heard of that whole IV crush, right? You've used that term before?
Yep.
So when you go over here and you sell cash secured puts, and let's just go a month out, just for easy math, right? Because I think there's going to be 128 days out. Yeah. So just look at it, dude. It was $650, $12. But look at the IV, $42. When it's juicy, SoFi's in the 80%, 90%, sometimes over 100% on the implied volatility. Do you know exactly what implied volatility is, Amit?
It would be what the market is assuming the move is to the other upside or the downside. So Nvidia's implied in volatility was 10% up or down, but on specific contracts, it might be like 200%, right? Based on what they think that specific options contract or the stock in general will do based on the binary event, which usually is earnings. Right.
So there's different schools of thought on this, but the implied volatility, to my understanding, and this was when I was actually in an options class at the CBOE, the options exchange in Chicago, because I've actually gotten a lot of schooling on options. I've been enamored with options.
They have a whole fucking school on options?
Yeah, well, you pay money for it. Yeah, there's schools. So anyway, I started studying options when I was like 11 years old. There was an infomercial called Optionetics that would come on late at night, and I told my dad I want to do that for a living. And he was like, you love money and you love numbers, so you'd probably be a millionaire doing that. And here we are. So my dad breathed that into existence for me at a very young age.
Yeah, it's really cool to do that. I didn't know that.
So anyway, that is the anticipated move for the entire year for that series of events, right? So like we're expecting about a 42% either way for this particular option. Now you can look at it as for the 28-day cycle. So it's going to go either up or down by 42%. So I always like to go over here to the options chain to see what really is the volatility is. I want to go out in the distance. And if I find something similar, then you're going to get something that's going to be very, very accurate. And you see how the volatility is very, very similar to about 60%. So market makers are anticipating about that type of move. You always want to keep the deltas very, very similar too. So I got to get a delta that corresponds to the other one I was looking at. So it's going to be closer. So this one's at 60, the other one's at 40. So if you go out in the distance, you're going to get more bang for the buck right now because the IB is higher. But in the shorter distances, essentially the market's saying, hey, the pendulum's not moving that much. It's just right here. So we're asking you to pick a strike price right here. So they're not going to pay you a lot. But if the pendulum's moving like this, that's a lot of IB. And if you have to pick a strike price right there when the needle's moving a lot, then they're going to pay you a lot more premium for that. So that's the reason that SoFi sucks right now, because there's just no IB. And then the VIX is low as well. Like the VIX, the volatility index for the market as a whole is very, very low. And that's where I wanted to end the discussion today. I wanted to put this in your ear, Amit. What do you think about selling puts on the VIX right now? Because it's at like 5-year lows.
Selling puts on the VIX.
Yeah, I do that a lot. I do that a lot offline.
What's the ticker on Robinhood for the VIX?
So I just found it on the ticker because I did it on a different account.
Okay.
But so it's VXX on Robinhood.
Huh. Interesting. And so the idea would be that we're going to have less volatility, correct?
Dismiss, yeah. So right now it is trading at 11.34, and we'll go here. Price movements. We got for the last week, it's down. For the last month, look how much it's down. For the last 3 months, down. Year to date, down. For the last year, down a lot. For the last 5 years, down a lot. And then for the max, it's down a lot.
But so the thing with the VIX is it goes up or down based on crazy events. And so selling puts on it would mean we don't think an event's going to be that crazy. Like we don't think Iran's going to nuke Russia or something. So it probably won't.
No, but that would actually be good for our option, and we're selling puts because this guy's going to go up.
So what makes it? Oh, wait. So it goes down if there's nothing happening.
Right. So in other words, how much more tame can this thing be? Because I feel like the chances of it becoming more volatile are more so than it not becoming volatile. We got elections coming up in November. We've got potentially cutting the interest rates, etc. We've got freaking military situations going on in
China and Taiwan. Yeah.
In China and Taiwan and all this crazy shit. Exactly, a black swan event will drive the VIX up. So to me, that's kind of like an indirect way of like hedging your portfolio a little bit as well, is selling cash secure puts on the VIX. This is the guys. I have never said this on camera before. This is the very first ticker that I look at every day. But it's on CBOE on Yahoo Finance, the VIX, the VIX. This is the very first ticker I look at every day, and then I'll know whether or not it's going to be a good day to sell puts or calls. The higher the VIX in general, the higher the premiums.
Yeah, I don't know about this one. I just don't know enough about this. I got to do some more research.
Yeah, do some homework.
Yeah,
do some homework. So
it's a very interesting idea, though. It makes a lot. You're making a lot of sense. There's a lot of shit we got for the next 6 months. Maybe that is the right time to sell.
Yeah, and Robinhood, that's not the case. Go to this Jim Fury Hesterman comment right there.
Yeah, VIX is the VIX futures.
So
yeah, I think he's right. Yeah. I mean, it's just a proxy for understanding VIX.
Right.
In general. Yeah. I mean, you're not
But
going
but that's because I go on Yahoo Finance and I just do CBOE, right, and it gives me that one. And it just happens to be the exact same price, right? So make it that way, you guys will. But that's one to consider. And another one I want to put in your ear is what are your thoughts on Unity software? Because I know that it's been a shitstorm over there, but it's also getting a more attractive valuation.
Can we look at the premiums on that? Because
they're not
it's down a lot year to date, so I'm not opposed to it. I have to do more research on if management has their shit together, because right now they don't.
Yeah.
Year to date, how far is it down? It's down 12% this week. Year to date, it's down 14% of the month. Yeah, this is a good candidate. It's down 50%. I mean, how much lower can it go is the argument. Obviously, it can keep going, but
yeah, well, when we look at it in 5 years, it's gone down 74%. So it tells you that it can happen, right?
Yeah.
Didn't they get a new CEO and stuff? I was texting with Tevis here a couple of months ago, and he was like, dude, it's a shit show. Stay away. But I haven't reached out since, and I feel like he's still in it. So if it was that much of a shit show, he would have cut his losses. You follow me? So
yeah. The new CEO, I don't know how much of I just know a lot of developers got pissed off at them, and it's been hard to build that relationship. But if it's down 50%, maybe.
So I'm just saying, you look at 28 days out, we go 1850. That's going to be, a 32 delta, which is pretty aggressive. It's 54 cents. So we compare that to a higher conviction play that's a similar price point in Robinhood. This is how, when I look at something that's similarly priced to something that I have a lot more higher conviction, I compare apples to apples as far as price goes. And I'm like, okay, well, do I want to go learn about another company if it's not going to pay more premium? If it pays a lot more premium, I'll learn. If it doesn't pay any premium, the game's over.
Right.
And look at Robinhood, same strike price,
wow,
pays more premium, a lot more conviction, same delta. So it's
$14 more premium.
So it's game over for Unity. I don't give a shit at that point. So that's just, when people give me tickers and stuff, this is the kind of shit that I do. So I don't mean to be so dismissive, but if there's something that I've already done some homework on and I'm comfortable and it happens to be the same price, I know it's a different business model and market caps and shares out, I don't give a shit. At the end of the day, we're talking about how much capital do I got to tie up and how much money is it going to pay me via premiums. That's what the game is for me. That's the reality.
Oh, that's correct. And so some people might say, oh, well, Robinhood at 18.5 and Unity 18.5 is a different market cap. That's fine, but it's still $1,850 that you're putting up at the end of the day.
I mean, you see, that's the metric that I got to look at the end of the day, is I got to tie up this amount of money for this amount of return. And I don't know shit about Unity. I'm learning a little bit about Robinhood every day.
Yeah.
And this one's already paying me more money for the premium. And this one's either profitable or on the verge of being profitable, and Unity's a shit show. So it's already sounding, just speaking out loud, that Robinhood is a much easier place to be in versus Unity. Follow me? I just say I keep shit simple, and I happen to make a lot of money because I think that you guys, a lot of y'all suffer from paralysis through analysis.
That's a good point, because now you objectively know, okay, Unity's out the question. You can move on. It took 5 seconds to figure that out.
I'm fucking done, because it's going to come down to that for everything for me. I don't give a shit what the ticker is. If I've got something in that price range already that I'm comfortable with, that's making money, you're going to have to present a hell of a case for me to want to take less premium, because now I got to go do homework to make less money. That doesn't sound like the American way, Amit. You know what I'm saying? Put that on a t-shirt. You want me to go do more homework to make less money? Get the fuck out of here, bro. Or what do they say in Brooklyn? Forget about it. You know what I'm saying?
Forget about it.
Not gonna happen.
I love it.
Anyway, I gotta get rocking and rolling. But one last thing I wanted to say, Amit, Jeremiah, bro, is not happy with FSD and Tesla. If y'all wanna get people to know about Tesla and FSD and have that conversation amongst you guys, because I don't own the car, he does. But he said they tried to run him into a wall yesterday.
I mean, dude, it's not good. I mean, it's not perfect yet. It's good.
Dude, my son thinks that it's like a decade away. He's had the car for 2 days, and he's like, I'm only willing to use it on certain situations, Daddy goes, this thing's not that close. He thinks people are exaggerating on X and stuff like that.
Is it a 12.3? Is the latest one?
He just got the car a couple days ago. They said they were going to set him up with the latest and greatest. I was there when he took delivery.
Yeah,
So
dude, it's not perfect, but a lot of other people are saying it's good. You know, I guess it's gonna take some time.
I don't know. You want to do your word of the day? I got to get rocking and rolling.
Yeah, let's do word of the day. Okay, so this is I think we both know this word. Ad nauseum.
Ad nauseum.
To a sickening or disgusting degree. The
So
catchy.
you cover Palantir ad nauseum.
I knew you were gonna say that. You look at fucking option premiums ad nauseum. There you go. That's it. Those are the sentences. That's all we need. All right, TJ. I love you, man. Thank you for being here. TJ's YouTube in the description and chat. Please make sure to give him a follow. And we'll be back next week. What are you doing today? Are you going out somewhere? Or you just
I gotta go, man. I gotta make a bunch of trades, brother, and I'm like so behind on some customers' accounts. I got some work to do, and then I gotta go get the Jaguar detail for my pops. I'm gonna go live on my YouTube channel while I hand the keys over to my pops. Puppy, he's gonna get all crazy.
I love it.
He don't have a car, dude. He's 73 years old, and he's going through it, right? Because he's been married to my mom for 54 years, and she's on the verge of dying and stuff. And he's always wanted a Jaguar, so he's the reason I bought the stupid Jag.
Yeah.
And so now this is his opportunity to have it, obviously on my dime, but I wouldn't be here without my pops or my
100%,
mom.
100%.
And I just want to give them something to look forward to continue living, guys, because if you have parents that are older and they've been married for a long time, there's a lot of studies that say if one of them dies, the other one dies shortly thereafter.
It happened with my grandparents in December 2 years ago. My grandpa died 5 to 7 days later. My grandmother, she's gone. So
yeah, dude, I can already see it in my dad, dude. He don't want to live anymore.
Yeah. And
I feel like he hasn't a good 2 or 3 years left, maybe longer. And I'm just like, dude, I ain't trying to bury both of y'all at the same time, or cremation, whatever the hell they opt for. So I'm just trying to give him a little pep in his step. Not to like bribe him or anything, but kind of like bribe him, if you will. Like, hey, you got this one thing to look forward to, but also for him to come to the realization that there's people here that they still love you.
You know, and that's I'm happy you bring this up, because one of the things when people get animated in the chat of like, oh, TJ's too excited about the options, or he's too aggressive, or admit you're too excited. Like, dude, I'd rather be animated and excited about something in life versus have nothing to look forward to. And I hope that animation lasts for you, TJ, for the next fucking 40, 50 years selling options, because when it's time to die, like, you got to have something that's keeping you awake every day and alive, you know, and giving you a purpose is what I'm trying to say.
Right.
So I think everyone should find something they're obsessed with and be a little animated about, because if you're not, like, what are you really living for? You know?
Agreed.
Love it, man. Thank you for being here. We'll see you next week.
Yeah, take care. God bless you guys.
Bye, TJ. All right, guys, that's it for me. We'll be live. I'll be on the market close at 3:45 p.m. and then we'll do Palantir Weekly. I still think we're doing Palantir Weekly 11 p.m. today. Yeah, we'll do Palantir 11 p.m. And we'll keep going from there. I hope you guys are enjoying the segment. This was fun stuff. I mean, I don't think there's a lot of channels on YouTube that are showing you this much money in real time being played with. The good parts of it, the bad parts of it, the losses, the wins, all that stuff. So hopefully you guys enjoying that. I'm learning a lot. Someone asked in the chat, Amit, how much money do you get from TJ for giving him these like plays and stuff? I don't get anything, and I don't want anything. I don't need a single fucking dime. I'm getting, I would argue, millions of dollars worth of knowledge, just like getting to sit with him and have him explain this shit. I mean, you heard what he said. He went to some school for options. He's giving us that school right now, right on the stream. So really happy that TJ gets to join every week and tells us about this stuff and keep going from there. Amit at dailypalantir.com. That is the email for those that want the exact spreadsheet TJ uses. Feel free to email, and I'll try to send it to you guys over the weekend, and we'll keep it going from there. Tired Gang says, you guys have inspired me to push my investing knowledge further and push to make more. Appreciate this community. Appreciate you guys. And yeah, that's the fun part, dude, about building an online community. If it's a community you actually care about and you're not, you know, pushing a coupon code every 5 minutes. I love Meet Kevin, but you know, that you guys actually get to like build a real authentic relationship, and hopefully everyone gets to participate and make a lot of money in the process as well. Real quick, let's look at the market. Robinhood right now, $20.97 on Palantir. Shopify 57.72. Robinhood 1968, up 2% on the day. Elf, wow, 195. Goodness gracious, up 6%. Holy crap, dude. Fucking elf, man. What a day. Hims as well, up 6%. We're having a green day. SoFi trying to get to $7. PayPal 61.68. We're having a green day. I would imagine Nvidia's green. S&P 500 right now 528. Yep, that's green on the day. And then Nvidia 1,039. That's also green. Not bad at all. Not bad at all. Michael says making money to support my gambling addiction. That's correct. We got to do that. All right. Thank you, everybody. We'll see you 3:45 p.m. for the market close. And then Steve will probably join the market close, give us his thoughts. And then we'll do Palantir Weekly at 11 p.m. today. On Saturday, tomorrow, there's no streams, to my understanding. No streams. And then Sunday, we'll have Howard, who's the founder of StockTwits. He'll be on the channel as well. All right. Love you guys. Thank you. I'm going to go try to find some brownie pancakes because I need to do that dream, dude. It's like, I'm like, how do we get I need a brownie pancake right now. I need to figure this out. Thank you, everybody. Have a good Friday. I'll see you guys in a bit. Good night. Not good night. Good morning, but you get my point. Bye.